I think if you look at what's going on in the world, IT is actually shifting to BT, business technology, where you can't actually do anything without technology. You can't sell anything, you can't buy anything, you can't make anything, you can't have customer relationships, and this is true across organizations of all sizes and government and society. And so I actually see the overall market, when you consider the role technology is playing, getting much larger. So when I go visit the largest industrial companies or the automotive companies, manufacturing, retail, they're thinking about how they use data in a very different way. Applications are very important, but ultimately it's the data that drives a business. And when you start to layer on these next generation computer science, the artificial intelligence, the machine learning, data is the fuel for that. We store more than half of the mission critical data in the world. And the amount of data is going to grow much, much more in the next 30 years than it has in the last 30 years. It's doubling at a faster and faster pace because of all these connected nodes.
Now, you're not fully private. VMware is still a public company. What's the long-term plan? Will you go fully private? Will you ever go public again?
Don't have any plans to change our structure. We're very happy with our privately controlled structure. We have 2 public companies in the group, and it's working quite well.
So we talked about M&A earlier. You said you were going to do a lot of M&A, but it's been fairly quiet. Why is that? Is it valuations? Are you not seeing anything you like out there?
We've done some M&A inside VMware, done a little bit in Dell-EMC, and look, we'll continue to explore M&A. Our Dell Technologies capital group is investing in about 1 company a week in new businesses that we're finding that are out 36, 48 months into the future, working on new things. There's also I'd say a wicked consolidation going on in the existing parts of IT, and we're using our supply chain, our scale, our breadth, the portfolio effect, and innovation to drive that and gaining share in that core as well.
So would you be more likely to invest in hardware or services at this point when it comes to M&A?
If you look at the things we're investing in, it's artificial intelligence, machine intelligence, next generation processor architectures to enable those new computing models. It's cloud security, how do you enable the cloud native apps, those kinds of things. We're pretty good at hardware, right? And we're going to continue to grind away at making that more and more efficient so companies can run their infrastructure in a super efficient manner. And look, we've got a massive innovation engine internally and with our partners to help make sure we continue to gain share.
So when you look at the competitive landscape, who can challenge Dell more than it has?
There's no shortage of competitors. I mean, we happen to be doing well relative to our competitors. I think the best way for us to plot our future is really to listen to our customers. If we're going around following our competitors, that's not really a great strategy.
HPE, is it still the rival it once was?
They're not doing so hot these days, and it's a better question for them. But we're clearly gaining share, and they're clearly losing share. And some of it is this portfolio effect. I think our innovation engine is on high. We've passed them in servers. We're far bigger than they are in storage. And look, customers ultimately will vote with their feet and their dollars, and they're voting for Dell Technologies.